Happy Sunday to you all. I'm going to take a look at a pair I haven't done on here yet, which is Euro USD. Let's go ahead and let's take a peek. It is Sunday morning, and this is Casey. Thank you guys for joining me today. If your week was anything like my week, it's been rough. It's been a rough week, but I am glad to be starting anew. And I'm looking forward to a pretty productive week. Last week, my week was extremely busy, so I didn't even get to trade at all last week. So I'm looking forward to this week and looking at a couple different setups. And I'm looking at Euro USD just to get an idea of what's going on. So for those of you who haven't subscribed to the channel, go ahead and subscribe if you're looking for more analysis like this. And if you're looking for a community of traders where we do no cost training on a pretty regular basis, you'll want to make sure you subscribe to, or excuse me, you join our Forex Mastermind group. The link is below the video. So let's go ahead, let's get started. Excuse me. If you're new to my channel, what I do is a top-down analysis to figure out what I'm going to do in the market and to figure out what's going on in the market. So I am starting from I'm going to start from the monthly. And what I'm looking for on each time frame is a high point and a low point formation. And for those of you who don't know what that is, I'll draw it out. A high point formation is going to be a high center candle, and then you're going to have two candles to the right that are lower, and then two candles to the left that are lower as well. So it looks something like this. Like, of course, all the candles are not going to be equal in size, and some may have a wick, and some may be short body with a long wick. Some may be just short body, period. But if you have some rendition of this formation, that's a high point formation. For the low point formation, it would simply be the inverse. So I'm going to go ahead and delete this. And so that's what I'm looking for here on the monthly. Now, where price currently is right now, it looks like that could be forming. I don't have it yet though. I may have a high point. So right here, it looks like there's a high point forming. I've got two candles to the left that are lower, but we don't have those two candles to the right yet. So I'm going to mark my high point as the last high point. So here we have a high center candle. We've got two to the left that are lower and two to the right that are lower. So I'm going to mark the high point. Ooh, I grabbed the wrong tool. And I'm going to grab my horizontal ray, and I have already saved the template. So I'm going to mark this as my long-term resistance. And then I'm looking for the same thing on the support side. And so here you see we have a big change in direction. When was this? March? Oh, that makes sense. So I'm going to mark this because I have a low center point. I have two candles to the right that are higher and two candles to the left that are higher. And I think I said that backwards, but you know what I'm talking about. So long-term support. And then what I do is I drop down and I'm looking for the same thing on a lower time frame. So I'm looking for my last high point formation after I've already selected this area. So I'm looking for swing high, swing low, next swing high, and this appears to be in this area. So I'm going to mark this as, it looks like it's turning into support, so I'm going to do it as intermediate support. And I do intermediate because this could change. It may reject off this level and it may continue down. I don't know yet. So I'm going to mark that there. And then I'm looking for inside of long-term support, I'm looking for the next low point formation. So we have swing high, swing low, two candles to the right that are higher, two candles to the left that are higher. And I'm going to mark this level as my, what am I on? I did that wrong. This should be long-term support. Okay. And then I'm going to drop down to the daily, looking for the same thing. So we did swing high, swing low, next swing high we've already identified. And so we've got swing low. This is the next level. So I'm going to mark this as my daily support. And then price is currently sitting at, let me see. Actually, I'm going to move this up to here. And that makes sense because price came up here, rejected off this level. So I had to count this. 1, 2, 3. This is probably going to pull back somewhere in here and then go for the 5. Yeah, so I got my daily support. We're at daily resistance. Excuse me. Swing high, swing low, swing high. We don't have a low yet. Let me drop down to my 4 hour. This is a level, which makes sense. Now I'll drop a horizontal line so you guys can see. So I chose this as a level. And the reason that I chose this is because here I see it acting as support and resistance. I see resistance. I see resistance. I see resistance here. So this is an area I definitely want to pay attention to. Let me go back in time just to see what is happening. Yeah, a level of support, weak support, but support. A level of resistance and support, resistance. And so now, oh, I'm too far back. Let me go back. Yeah, this is a an untested area for support. So what I think might happen, because if I'm counting my waves right, we've got 1, we got a short pullback, shallow pullback for 2. This is 3, and now it's got to pull back. It can pull back all the way to this area. If it truly is a 4 corrective, because it can't go into the price territory of wave 1, which if it stops at this level, that would mean that it truly, in fact, is a 4, and then it would continue up. So what I want to see, let me see. Let me get rid of this. So price is about to head back down. That's my thought. I just want to see something. I'm going to pull out my Fib Tool and just see what level. Yeah, that, well, potentially matches up. And so what I did, I just went from my swing low to my swing high, which is here. And I'm looking at this level. This makes sense. My line is a little lower, but remember it's a zone. So the 61.8 area is 114893. I'm about 70 pips away with my zone, which still makes sense because it could fall into this area. So I'm going to mark this out because this is the area that I want to pay attention to. So let me extend this because I want to, yeah, I got to pay attention to this area. So I'm going to call this 750 and we'll call this 1000 so we can keep track of the area. I'm going to get rid of this horizontal line. Excuse me, y'all. And if we do pull back to this zone, then theoretically, price is going back up to this long-term resistance. See, you guys see what I'm seeing? So remember, I love Fibonacci. For those of you guys who are new, I absolutely love Fibonacci. And the way that I use it is I do color to color match. So the positive numbers in this area are retracement levels. The negative numbers that you see up here are extensions. So retracement basically, for an easy way to think about it, is an entry level. This, your negatives are your take profits. So this to me is a take profit level. And what I'm thinking is price is probably going to pull back to this level and then make its way back up to this area. So I'm going to drop, I mean, that's a long-term trade, right? I get, that's what I noticed, like a lot of the reviews or things that I've done, they take a while to play out. But what this simply means for me is that I'm looking for buys all the way up. Now I won't execute on anything until I actually see. Uh-oh. Let me do this. Negative 100. Oh, we don't want 100,242. And we'll add a 0 here. There we go. Now I'm not executing on anything until I see evidence that you know, my analysis is correct, but this is a untested level for support right here. So my thought is it's coming back to this area before it continues up. Now, of course, it's got to break through this level here, and that's what I'm thinking. This is what I'm thinking. Let me take my fib off. See what's going on. Yeah, these are impulse waves. Yep. Let me just grab my fib, see what's up. Yeah, see, this is further for me confluence. So if I'm trading, so the trend clearly has been up since April, right? And so the dominant trend in the market is buy. But you can trade a counter trend trade. I typically would only trade it to the 38.2 level, or you can keep riding it down as long as it stays underneath your down trend line. But typically, these red levels, the 38.2, the 50% level, and the 61.8 are typically where we see some sort of reaction in price. So we see like a reversal or, you know, a trend change at those levels. So my thought is that this level, that this level, this is an important level. This is an important level. I could trade this down to about here before I would get out. Let me see how many pips this is. Yeah, you're talking about 400 pips. So, let me see. Let me remove this. And then I just want to go back and look to see what happened here. So this touch, wow, you guys look, I love Fib. I love it so much. Okay, so I went from my swing low to my swing high, and I'm looking where price pulled back to. It pulled back to the 78.6 level, which is blue. And then price continued up until the 2.7 before it kind of stalled and did some retracing or whatnot. So here was because you don't enter on the first impulse move. I know some people are like, oh, I'm gonna miss out on money. Like, you don't have to be first in the market. You just have to be right, right? And so this initial move was made. This is the A, B boundary. This would be considered the C, and then this area would have been the D. So this would, oh, I'm drawing that weird, huh? That would have been the entry, right? And then we expect it because at the 786 level, the extension for that is the negative 2.7. So I just want to see how long that took to get there. And we wouldn't even wrote it all the way up there. We'd have wrote it right here. 557 pips. It took a little over a month, but that's still a great setup. So that means you could have taken buys all the way up. So that's pretty dope, man. Okay. I'm just doing some I guess you call it back testing to see how this played out. These fibs are amazing. If you are not using fibs, I know I say this in every video, but if you are not using fibs, you need to get on it like ASAP. Amazing. Look, so prices hit an extension. So I measured from the swing low to the swing high, swing low, swing high. Price pulled back to in between the 38.2 and the 50% level before continuing up to the extension, the negative 618. That's when you start to see like it kind of, you know, it's in consolidation right now. But that's when you saw it like stop. So it actually came up to the extension, stopped, pulled back a little, then continued up. But that was, I probably would have got in somewhere right here. 559 pips. Pretty dope. Okay. So 1, 2, 3. Yeah. My sentiment is I'm bearish on this for right now. I know the overall move is up, but my sentiment is bearish because it has to correct. Now it's hit an extension, it's got to correct. What I'm drawing right now are just my trend lines so I can monitor what's going on. And actually I think I don't want to do it from there. And I've got these real light. I don't know if y'all can see these. But this is what I'm looking for. I'm going to wait. I'm going to wait till I get a break out of the consolidation before I enter the trade. I'm going to get rid of this. Remove. Yeah, I'm going to wait until I get a break out of this. I mean, you could trade this, but I don't like trading consolidation. Some people love it, and it works for them. I just know for me, I don't like it. So I would wait for a break. My thought is that it's going to break below, but it very well could break above. But based on what I'm seeing, this would be my, hold on, where's my call out tool? This would be my final take profit. And I wouldn't enter a sale until I saw a break out of this structure. So a break out of the consolidation, and then also a retest of that area, and then sell off. And I know I'm missing out on some pips, but I mean, that's still 320 pips, which is a good deal. So my entry level, oh wait, I can't say exactly where I would put it yet. I got to see a break out of this box first, and I would trade that now. So let me just label what I'm seeing. For those of you who don't know, I do study like Elliott wave, and so that's what my analysis right now is based off of. So I'm gonna draw with the Elliott impulsive wave tool on TradingView what I see. So let me go down to the 4 hour, because that's where I see it. Actually, 1, 2, 3. Yeah, 4. Uh-oh. Let me get this over. I'm gonna have to drop this and then just move it to the right place. So let me go up 5. This is what I see. That's what I see. So let me show you what I counted. So I counted, this looks like a leading diagonal. So the first move, this was A, this was B, this was the C, and this was the D. That was the first move. And then you see, actually, when I come down, hold on. So let me draw out what I see. 1, 2, 3, 4. Oh, this is done. 5. So it's got to come back to correct, and it's coming on. It's going to correct the overall structure. So that's going to be, yeah, yep. It's going to correct the overall structure. I just don't know how long this consolidation is going to last. It could last a while before it starts to turn. But I think the next move it's going to make down is the corrective move, which is the A, the B, the C. That's one of the moves it can make. And then I think we're going to see it go back up. So that's what I'm anticipating. Oh, that's so ugly and I can't see. I can't see it. Oh boy. Let me move this down. Yeah, that's what I see happening. Let me know your thoughts. What do you guys trade Euro USD? Let me know what you think is going to happen on this pair. I think we got a corrective structure about to happen, and then a buy for the long term. But right now, it's got to correct first. So we got to wait for another low point in order to buy. Let me know your thoughts below. Thank you guys for watching, and I will catch you on the next video. Bye.